I'm going to go over Friday's price action, September 12th, 2025. So what I've been using is Day's quarterly theory kind of mixed with Romeo's Model 1 um, entry model, and I found that this is the highest probability way, in my opinion, to trade quarterly theory. Um, I honestly don't think that there's a better way. Day might have concepts that I am not aware of yet. However, I'm not one of his students. I've just found his information online. So this will be the trade that I missed on Friday, but I'm going to just be reviewing it. I actually took a short on Friday and it got stopped out, and we'll go over that one as well. So let me turn on this stuff. Okay, so this would be the long that we would have taken. Um, However, I just wasn't on the charts to see it setting up. So basically, how I'm trading quarterly theory is that I'm waiting for a high time frame, a low time frame, and then a model 1 that Romeo uses. That's his model to enter a turtle soup, basically. So as you can see, let me get rid of the drawings. Let me get rid of everything. So you can see this low right here. This low is obviously a turtle soup, right? You can see it right here. Swept that low and then reversed for the rest of the day. So this would be your turtle soup entry. If you can anticipate, once I get better at quarterly theory, I'm sure that I could enter trades like this. However, at this second, I'm not good enough to anticipate a SSMT. So if you could anticipate it, this would be your turtle soup. However, I would enter off the Model 1, which would be this thick down candle that stabbed the low and form the SSMT. So once price closed above here, your entry is set. So you could take an entry off the top of this order block. Um, so what that would look like is, let's zoom in here. Once this candle got closed above right there, once it got closed above right there with this bullish candle at 955, you could take an entry and buy below the 10 a.m. open because now you're anticipating price to be bullish because of the SSMT, which will also show right here. So if you look down here on the bottom of the screen on the left-hand corner, these boxes represent every quarter of the 90-minute cycles. So there is 4 6-hour quarters in a day, hence quarterly theory. There's 4 6-hour candles within a day, so every candle is a quarter. So you could see right here, the day starts out at 6 p.m. over here. Day starts out at 6 p.m., right? The gray boxes represent quarter 1, red boxes quarter 2, and this is a indicator by 2 degrees as well. You can check out his indicator. So this is Day's quarterly theory by 2 degrees. So basically what I saw, right, is you're looking for a SSMT between quarter 1 and quarter 2 on the high time frame if you're going to trade London. Now I only trade New York, so I'm looking for a SSMT, so a sequential SMT, meaning that it is time based, right, with these specific quarters of the day. So I'm looking for a time based SSMT, right? So what I saw, right, is you form this low, the lowest low of quarter 2, right? Which on NQ is right here, lowest low of quarter 2, right? Lowest low of quarter 2 on ES, and lowest low of quarter 2 on YM, right? So you're not looking for any sort of setup until either the high forms SSMT, which you could look for a bearish setup, which I took. However, that setup failed, and then we ended up being bullish for the day. Or you can look for, so you're not looking for until the high or the low of quarter 2 on the 6-hour cycles gets breached by one pair, one asset, at least one asset. Not all three though. And the closes also matter. So if one pair closes above or below and the other pairs only wick, that can also be a form of hidden SSMT. So basically what happened, right? This should be the trade that I took. Quarter 2, low, 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 right? YM sweeps this low at 930, right? And where is NQ? NQ is all the way up here. ES is all the way up here, right? So now you're anticipating that this low is not going to get taken on these two pairs, right? But that's not confirmed yet. You can't just enter, right? Now you also need a low time frame SSMT. So if you look down here on these smaller boxes, these smaller quarters, right? These are 90-minute cycles. So now you're looking for a Q1, Q2 SSMT, so an SMT between these two quarters, so the lows of those quarters, right? Or you're looking for an SMT between quarter 2 and quarter 3. Now, since the low of quarter 2 on the high time frame didn't get taken till quarter 3 on the low time frame, you're going to be looking for an SMT between quarter 2 and quarter 3. So I'll show you what that looks like. So NQ's lowest low in quarter 2 is right here, right? What happened? Price stabbed into the low and closed below. If you look at ES, price did not tap this low, right? So price did not tap into this low. That's an SMT right there, but it's not confirmed yet. It's still not confirmed yet. YM, quarter 2 lowest low was right in here. All these equal lows right here. Breached it, also wicked it at 9:30, right? But there's no confirmation yet. What you need to look for is now a Model 1, which essentially did not take place until 9:55. You got a Model 1 on NQ, and you got a Model 1 on ES. I'm only trading NQ as it moves much better than ES or YM, so I only trade NQ. However, your Model 1 would be confirmed right here. So that confirms the model. That's basically what we're looking for. A high time frame SSMT, low time frame, and a Model 1, which is confirmed by the close above that down close candle. And then you can enter off of the top of the order block, stop at the low, or you could put it in a swing low of some sort that retrace into. Like you could put it here as well. However, I just use the low of the order block. I found that that's the highest win rate. Your target's a 3-to-1 because if you're trading SSMT, you're essentially trading a turtle soup, right? Because if you're not anticipating this low to get taken on ES, right, you're trading a turtle soup. NQ takes it here, ES doesn't take it, so you're trading turtle soup. So you should be targeting at least a 3-to-1, which it ended up hitting a 3-to-1 later in the day, near close. Stuff that makes this model higher probability is if you have a high time frame level. So you could use new day opening gaps, for example. So new day opening gap or maybe a new week opening gap, which are the blue ones represented by the blue lines. So you were inside of a new day opening gap, right, of this day. Inside of a new day opening gap, you get your Model 1, so this makes it way higher probability as well, right? So you would enter off the top of this order block and target a 3-to-1, and that would be the setup. So this should have been the trade that I took on Friday. However, I did take a short, which ended up failing, and I missed this setup. Let's go over the short that I took. So again, you're looking for an SSMT on the high time frame and low time frame. Quarter 2 high, highest high on NQ gets breached at 7:55. Quarter 2 highest high on ES gets breached at not till 9:55. So you have SSMT right here, right? 7:55. At the same time that NQ took out quarter 2's high, ES was down here. At the same time that NQ took out quarters 2 high, on YM, the highest high in quarter 2 is all the way up here. So at 7:55, YM is all the way down here, right? So that's your high time frame SSMT. Now you're looking for a quarter 1, quarter 2 because it got taken in quarter 2 of New York session on the 90-minute cycles. So you're looking for a low time frame. So your low time frame would be right here. What I've also found, which made this setup lower probability, is that your quarterly high or low should be like a defined important swing point, right? So see how like this is clear as day, the lowest low of quarter 2. And I'll explain what I mean right now. Quarter 1's high on NQ on the 90-minute cycles, right? This gray box. The highest high in this gray box would be right here, right? And when does it get swept? It gets swept right after. But you could see like this isn't like a defined swing point. Like if this was the highest high, different story. But this is not a defined swing point at all, right? And it gets taken 5 minutes later, right? So I'm gonna look more into this in my back testing as I, progressively continue back testing this model. Um, but like when this high is not a significant like swing point, like such as the long that was in play for yesterday. The quarter two low on the low time frame, see how it was a defined swing point? Defined swing point. YM not really defined swing point, but on NQ is defined swing point, right? Like you could clearly see that this is the lowest low of quarter two, right? So I think that that's why this trade did not also play out, regardless of if we were bullish for the day or not, right? This trade also did not play out because this is not like a defined swing level, right? As you can see, like this is the SSMT right there. You get your Model 1, right? YM did not take out quarter one's high. It's all the way down here, right? So you get a change of state delivery. You would enter off of the low of that order block, target a 3-to-1, right? Now what I've found with my losers too is that most of them at least run like a 1-to-1, right? And you could see this trade ran for almost a 1.5R. But most of the losers actually end up running for a 1-to-1. So something I could potentially try testing out also is like taking a contract off or something at a 1-to-1, just in case it ends up being a loser. Then I don't lose really. I only lose half of my risk at that point, right? Um, but yeah, you would target a 3-to-1, and this trade ended up failing at 9 a.m., right? Got wicked out. And then it gave a bullish setup, and that one played out for the rest of the day, right? So that was the trade that I took, and I'm gonna try to backtest more so with this in mind, like when the high of a quarter or a low of a quarter is not like a defined swing point, right? And again, like with the long, the quarter two 90-minute cycle low is right there. See how it's like clear defined swing point, right? So I hope you enjoyed the video. I'm gonna keep doing these daily like reviews of like the setups that I would have taken or had taken that day, and I'll continue my back testing and like update you guys on my stats and everything on how this model actually performs, right? Now, I don't know everything with Day's quarterly theory, but I have a very good understanding, and I kind of implemented Romeo's Model 1 into Day's quarterly theory because I think that this order block entry is the, highest probability entry. He also uses PSPs, which are precision swing points, which you could probably find a video on YouTube. But essentially, it's when there's like a cracking correlation between the closes of a candle. So, for example, see this swing high, right, on ES. Bullish, up close candle, NQ. Bullish candle on ES. However, this is a wick candle. It's not clearly strong bullish candle, right? But on YM, it is a down close bearish candle, right? So that is a PSP, right? Because you're forming a swing point right here, and you have a cracking correlation on the actual closes of the candle. Bearish, bullish, bullish, right? This formed a swing point, NQ didn't form a swing point. However, there is a cracking correlation right there, and that ended up forming high a day, right? So I'll continue doing these videos every day, and I hope you guys enjoy. And it's more for my actual study than anything, but I hope that you guys learned something.